All right, here we go. Here's the daily bias that I was talking about. So this is my setup so far from the August high to the October low with this PD array right here. Just gives me a basic range of premium and discount set by that August high and that October low. So as you can see on regular ES, we broke September highs, and then we had the huge sell-off, which makes sense. Rate on liquidity breaks down. Kind of what we were discussing today was this fair value gap right here on the daily, which I'm going to talk about why we're not testing it. Also notable, we were talking about this daily order block right here and how all these candle bodies didn't break 50%. Well, today we did, so that's a huge confirmation on bearish outlook right now. All right, so let's dive deeper into this. I don't know if you guys have ever gone over these terms called an outside bar or an inside bar. And I used to use this strategy a lot for options, and it actually works really good, these outside bars, which is this candle right here. So this down candle is, the high of it is above this candle, and the low of it is way below this one and below this one. So this one down candle completely consumes these. So I would call those outside bars because it creates an outside high and low with the candles behind them. So I don't know why I didn't do this for our futures trading, but if you take a fib on an outside bar, because this outside bar sets a range, and as you can see, I'll just expand this a little more. You have, I got this labeled previous week highs and the previous week lows. So this one single candle gives us a really good range to work within. So what you can actually do is you can run the fib tool high to low, and this will give you which side the candles are going to break on of this outside bar. So I used to do this, and when it gave me the telltale sign, like with options, I would take an option, either a call or a put, and when it would break one side, it would usually run up a decent amount, and you could play calls or puts based off of this outside bar, and it's a really high probable setup. So right here, we have this outside bar. The next day, we have a bunch of sell side liquidity down here. So before today's candle was there, this first wick, I drew this sell side liquidity box because every time we dipped in it, we had huge wicks coming out of it. I mean, we hit this area, it wicks up. Next day, we dip way down in there and it wicks way up. And then the next day we run up. And then this big down red candle, huge wick inside, and we come all the way back up. And then the following day, we dip in there again and we come back up and we close higher. Now, yesterday was the telltale. So based off this fib, we get the high of yesterday's candle into this discount, because our bias is bearish. We just had this huge sell-off into this discounted area. And look at this wick coming down from it. It rejects out of that discounted area. That right there is enough to tell me that we are not going up into this daily fair value gap within the next day. And then today's candle was just confirmation bias. So you can use that strategy with the fib tool by putting it on a candle that has a high and a low that's completely above the previous candle, because it creates a nice range. And then you can get bias off of that. So I don't know, I kind of got turned around thinking that we would come up into this area first and then come back down into this weekly order block, just because all these wicks out of this sell side liquidity area kind of had me thinking like, oh man, they're building up orders and they're taking off out of that liquidity area. So I thought it'd be built up for a move up, but that should have been the telltale sign. Along with, we took out September highs on ES and we had a huge sell-off. We're going into this little bit of consolidation, I guess you could call it, on the daily, but just kind of range bound. So I think definitely that the next target is going to be into this weekly order block, and with the projection on my fib, this first standard deviation 37.23, well, takes out equal lows, takes out a big swing low, and goes right into this daily order block here. So that's a pretty good target, I would say. All right, now let's go into my London Open fuck up. All right, so first of all, let me get rid of some of these lines. First of all, I had the wrong bias. So that was my mistake right there. So the setup that I was looking at, delete, I'll show you right now. I'll set it up. And it's my fault for holding so long. Okay. So 15-minute chart. All right. So yesterday we had this 15-minute order block that hit. Huge rejection out of there. I mean, we had a good down day and then, or sell off from London, and then in here wicked out twice and then came up. And then we just kind of stayed inside this range. Same thing again. Created relative equal highs, and then we just stayed inside the range that the New York Open gave us. Asian session opened, and there's this fair value gap right here on the 15-minute. Okay, so we create a swing high, come down, swing low, come back up into an order block, come down to this fair value gap, create a equal highs right here, come back down to this fair value gap again, run out of it. That's pretty good. 3 15-minute candles in the Asian session up take out the equal highs, come down here into this fair value gap, up, down, and then we had this huge move out of this fair value gap up here. So right here where I have this white line, I figured we had the original rejection out of the order block on the higher time frame, and then we had these fair value gaps that appeared to be bullish, and we kept rejecting out of. And so this was my, okay, huge displacement right here. I'm going to take an entry right here, and thinking that it's going to hit here and then go long. And I was looking to take out these, and I was actually thinking we were going to get into this 15-minute fair value gap up here. And depending on how the London sesh went, thinking that New York was going to take us up maybe into the daily fair value gap. Again, I explained why I was completely off with that. So here's my mistake. Number one, my higher time frame bias was off. So that right there is going to set the tone for this not working out the way I think it's going to work out. Number two. Oh, here we go, a little side note. Midnight open, London open. I got to keep looking into this because this seemed like prime to reject here and then continue moving up, which we did not. So entry right here, stop loss just below this, okay? As this doesn't reject out of here like it should if it was bullish bias and it was going to follow the rules, it would have hit this and it would have immediately rejected. That again is another thing that I think must be constantly taken into consideration, and I know ICT talks about it all the time, is how long is it staying in the area? And there's many examples where when it hits its target and it's going to move away from that target because it's a true setup, it does not stay in that area long at all. It quickly moves away. And vice versa. If this is going to be invalidated, it quickly moves through it. Now, on the 15-minute chart, this is a pretty quick displacement right through that. So I see it coming down here, and I'm like, okay, maybe it wants to take out these equal lows right here. So I think that it's going to get into this, take these out, and get into this order block right here. So I set my stop at the bottom of the candle body. Fuck me. And look at where it hits. A freaking quarter of a point. If I was smart, I would have put it here, and at least I would have made out back up into this area. So kind of a big mess up. I think I was down like 1,800 off of that play. So lesson learned, no worries. Just go back and analyze it. Go back and review why the trade didn't work out. Go back through the checklist, top-down analysis, and review the points that are pertinent to taking plays using ICT, and get ready for the next trade. All right, that's it. Thanks, guys.